Hello everyone. So today is 16th of Feb and today we had our expiry and today's video is going to be interesting as remember I told remember about this video on February 13th. Okay, now the cloud has cleared up and you can see very clearly what I saw on that day. Okay, so we will discuss that. Before that, we are going to discuss what happened today. So today I was having, when market open gapped up, I was with call writing position. So all of them went into negative, and somehow I managed to close it in minus 16k. So yes, it's not like when you trade in stock market always you will be profitable. So when you are having a loss, so you should also know how to manage your loss. Okay, and so how I managed my loss was that in the morning I saw that 18,100 put riders were closing at the price of 23 to 24 rupees. Okay, and that and 947 I told clearly that call writers we should do call writing. Okay, because I did call writing and why? Because below, like me, the big players who did call writing, they were also trapped, and so market has to come down. Okay, up move was very limited. Why? Because first of all, I mean, the future short positions are there for the FIIs which they are not at all like profitable. So upside was limited, and coming downside there was many reasons, because of the future short, as well as they were having in today's expiry they were having some call writing positions. Okay, so this move I clearly told you that go and check the earlier videos that I told you that whenever market wants to go down, before that it tries to hit the tries to hit the bears very badly. Okay, why? Because now for the last 2 days or 3 days, whatever, since the bears were hunted so badly, even if market goes down tomorrow, every bear, or not every bear, most of the bears would even like fear to short the market. Okay, so to give, to give the fear to show that don't short the market. Okay, when we are also going down, so that's why these things are done. Desperately market comes up, and then finally you will see that market is again going down. Okay, so yes, today we did call writing, and yes, how I managed was that I again shorted heavily at 18,100, 18,050 and 18,000 as well, call writing. Okay, and finally things came down, and yes, I was able to manage my loss. Okay, and this loss is nothing but like it's an usual loss, and we can manage it up in the next with the next trades. Okay, talking about the indicators, if you see here, like though market again tried to go up, but look at the score did not go up as was in the morning. Again the score came down, but again the score did not fall heavily, showing that market would not fall heavily, and the scores concentrated, and that was the thing. Even if you see here that the scores were a little bit positive in the morning, there was some up move in the morning, but then it finally came down, and yes, it was in the neutral zone, and sometimes going into the negative zone and so on. Okay, so it was clearly showing the pattern how the index was in Nifty was behaving. And talking about Bank Nifty also, Bank Nifty was a little more bearish, and you could very well see it from the scores. Okay, so the scores fell sharply, and for Bank Nifty also it was a very nice move from here, that is 41,853, the level which we talked earlier also. Even you can say 42,000 also, where it did not go very near, but you can say 42,000 acted as the resistance. The next level was 41,853, that also acted as a nice resistance, and finally it came down to the next support, where the next support is at 41,503. We have discussed these levels clearly in the many earlier videos. Okay, every day we discuss this level. So those who are new, it might be new, but those who are watching me for a very long time, so it's a very it's not a new level for them. Okay, talking about Nifty again, 18,000. So in the morning, the major thing was that breaking 18,084. Okay, so here it took support, then here also it was trying to take support, but finally it broke, but again it went up. Okay, so I mean, it was not just giving a nice exit, again it went up and finally it came down. Okay, and yes, so now let's go and talk about this. Okay, so yes, for this video I made yesterday this video that my analysis went wrong. Okay, so those who took short positions this expiry, yes, we all went at a loss, but nothing to worry about, we will again recover it. Why? Because my analysis did not go wrong, it was right. Okay, so what I saw then you did not see. Okay, yes, now the thing is that then you would say that why did I go into a loss? Okay, because the thing is that these put buying were done. Okay, so the put buyers were active, but the thing is that they delayed the move. Okay, and also I have been kept on telling you that these put buyers are in the monthly option chain. In the earlier videos also I have told you that. So yes, now you understand that even having put buying positions, they still would come, they would still buy in the cash and hit the beers and then finally show their real colors. Okay, so let's come and analyze. So FIIs again, futures position almost the same, slightly increased, that's nothing, but yes, futures position slightly decreased, very slightly. Okay, that is nothing, almost the same. So this is a huge futures quantity. Okay, so again, though a huge amount of positions have been closed, but this is also nothing that you should joke about. Okay, and yes, now let's come to the option index. Option index FIIs are clearly they have like huge call writing positions. Now I won't say, I mean, it's huge, but according to their data a little more call writing should be done. Okay, and but now you see here the put buying positions. Okay, so the put buying positions are there. So these put buying, if you say that they are for hedging purpose, then say then try to answer the question, that is hedging for what. Okay, so now someone can say that hedging for these futures long positions, but that's not huge futures long positions that so much of put buying needs to be done. And also now after they have closed their put writing positions, the huge put writing positions that they did this week, now the cloud has cleared up and now you can very well see clearly that the put buying quantity is in huge quantity. Like just compare here, if call buying is required in this amount for the hedging purpose of these huge amount of futures short as well as call short, then just for these amount of put writing, okay, and also some amount of, if you even say put futures buying, why this amount of put buying? Okay, so again, now the thing is that we also, yes, we can't just go blindfoldedly, because we learned something this week that they can do anything. Like they can again do huge put writing to cover up their loss with these put buying. They have done it this week, the earlier week also. Okay, and yes, it's possible for them because they have a huge bandwidth. Okay, so now in the current market we have to figure out whether put buying is going on or not. Okay, so again, looking at the current data, I would suggest sell on rise. And now coming to Propdex data also, like they have closed futures long some positions, and also like future short is almost the same, somewhat closed. And Propdex is also now carrying overall more call writing positions than put writing, but again further data is needed for the Propdex to clearly indicate. But FIIs, it's a clear indication that call writing has been done, and call writers can initiate their call writing positions. So again, initiate your positions according to your risk appetite. So it's not like you just initiate it in the money or at the money and you don't have the appetite to hold when things moves against you. So I would suggest you do it according to your risk profile. And yes, the final verdict would be sell on rise, okay, and or maybe sell, might not rise, sell, okay. That you have to figure out again in the current expiry, okay, in the ongoing market, okay. And yes, now let's come to the thing, that is, yes, XGX Nifty went below 18,000, okay. US markets are falling, so not a good sign. But again, if US markets are falling again tomorrow, as you know that everyone will be bearish and market won't fall. So even if data is bearish, market won't fall. So there are many things to consider, or maybe there might be a gap down because the FIIs, they already have their call writing positions. So that's the thing, like even like yesterday I said that there could be two possibilities, like either it's coming down today and then it has to go up because of the put writing, or if it's going up or gap up, then it has to finally come down. I just gave two scenarios, and you saw that when it went up and then finally it came down, okay. So here also, like, we have to be a little bit cautious. Finally it could move down, but again, since US markets are down, everyone would be bearish, market might not fall as expected. And yes, don't blame me after that, but if put buyers are active tomorrow, so then definitely market could go down. So we will have to figure out, the first thing in the morning is whether put writers or put buyers are active, okay. And also, if you look at these data, that is, FIIs are constantly buying, right? But if you see that the overall advance to decline ratio in the market, that is not coming out to be favorable, though both FIIs and DIIs are buying, okay. So then, like, we should, so then what happens is that overall market participation is not happening. You see that the declines is strictly increasing, the steep slope is increasing, okay. And the advanced slope, if you look at the graph, it's flat. So why then? So that means particularly some stocks are chosen and there some buying were done to support the index, or maybe support somewhere else, whatever. But the thing is that buying is not going on in the overall market, okay. So overall market is still not looking good. And that's all for this video. So thanks for watching. If you like the video, please do like it and share it among the other traders. And yeah, that's it for this video. Thanks for watching. See you in the next one. Okay.